Hello, folks. Utilizing ICT, factoring in daily time frame perspective in this case. All right, using that model in a higher time frame, perspective. If you get it. Originally, what we saw here was that we had a sell side liquidity here, of which price traded into. You can see this, so traded sell side liquidity traded into it. All right, price grabbed the sell side liquidity. Originally, this was here. It's all about in ICT. It's all about what makes price move. All right. ICT comprises of time. ICT is trying to let us know at what time, when are we supposed to look for opportunities in the market, first of all. So you have to identify that particular time of the day, which could be your London session, New York session, or even Asian section, or even Asian session. But then, after putting that time factor in place, the next thing is, why would price move? All right. So price would always move when there is what liquidity. Price had to come down to this point to grab some liquidity. All right. Grab some liquidity. And then where is price going? Initially, I saw imbalance. Price will literally take liquidity before moving. And then price will also go to refill imbalance. All right. So there are two things. It's either liquidity is making price to move or imbalance is making it to move. It's either price is going to grab some liquidity or price is going to rebalance an imbalance. I hope that makes sense. But I will make a video explaining those two concepts separately. Your sell stops. Now, price has taken some liquidity, like in your case, the sell side liquidity, that is your, so price has taken them and eventually price went up. All right. And you can see here, buy side liquidity. I was expecting price to around this FVG show sign of retracement, but no, price traded up until this what you can call order block. But I know that this order block is an invalid order block. For price to get to this guy, then price must grab the liquidity. Why? Because this order block didn't grab any liquidity before. I know that will sound somehow, but other blocks that work are actually other blocks that have taken out liquidities. All right. Now, I expected price to trade above it. Immediately, this candle was this powerful. All right. I knew price was going to go above. That was just it. I was no longer interested in trying shorts from here. So I wanted to see price take out liquidity. All right. Just be taking note of that. Price eventually took out liquidity. Liquidity in this case, your buy stop orders. Price eventually took out the stops because people that were selling here, all right, put their stop loss here. So price eventually took it out. And people that want to buy, all right, want to buy breakouts. They want to say, okay, let this area be broken out, and then they start buying here. That's why it's buy stop. All right, liquidity. So immediately price takes that out. The next thing I was looking for was the hourly time frame. Now, on the hourly time frame, there are a few things I had to look out for before making entry. All right. So I wanted to take entry. Immediately price takes out this structure. This is an internal structure here. All right. So price breaks it. So ordinarily, I would want to take price to give me a retracement even on the 15 minutes or lower, so that then after closing below this, so that I can make an entry. But price traded down up to this point. It was just too much. So I couldn't take a trade because taking this trade here, I would have to put my SL here, and then I would have to be targeting here. And you can see price didn't even get here. So it's not advisable at all. Then, except you can scalp in between if you have opportunity to scalp. Then what I have to do is to identify this called breaker block. I had to identify this breaker block and waited for it. All right. So now, how do I make entry? I've seen that before price get to the breaker block, it has created buy side liquidities, which is very important. You need liquidity. If price had not created this liquidity, I'll be skeptical about this trade. I want price before price gets into my breaker block. I want to see price creating liquidity. And if price doesn't get there, I would want price to do what? Break this structure, create another area. That's this another safe way of making entry in this case, or you can double in scalp. All right. With my understanding, price creating this high, this high, this high, or this one was more of an encouragement to me. In fact, I wanted it. All right. And I was seeing it, I said, oh, this is what buy side liquidity. All right. So now, what I was expecting was for price to take out those orders and trade into my breaker block. Now you can see people were selling their stop loss were here. People who wanted to probably buy, they were waiting for breakouts. Probably they bought here as a ranging market. All right. And if they want price trade above, they buy. And that's just it. All these are just the way the market works. Is here. So price takes out all this liquidity around here, traded into the breaker block. Now, this happened when the market was about to close on Friday. So market eventually closed. What do I do on the Monday? How do I not take this trade? Since I'm not able to take this trade and I don't trade Asian section. So if I was trading Asian session, or if I wanted to trade it, price already has provided me change of character. You can see price traded into this doubled around here. All right. This is more like equal tops. You could call it relative highs. But the tendency of price coming above here is low. If price should come trade above this place, then price should as well trade above here. All right. Technically, I want to see price stay below this guy. Now, what will be my entry? Seeing that price has made this, and immediately I saw this break here. All right. If I was in the market, or if it was market, I was able to trade because it happened during the Asian session. All right. So, and I trade just either London or New York preferably. But what I would have done would have been to have my pending order here. All right. Just, it's pretty simple. You see, in trading is about waiting. Every other thing is easy. If you can wait and map out it and not be greedy, patience and avoid greediness. That's what you need. If you can be patient and if you can do away with greed, then you'll be good. All right? Because it's impatience that brings fear of missing out. And then greed makes you lose and eventually you are scared. And when you are scared, so everything boils down to fear. And fear is equivalent to failure. So what happens here is that price eventually traded. I would have put my SL just right above this candle. All right. Look at this, the other block here, or you can call this guy breaker block, where I would have put my pending order. All right. And you can see how price traded would have triggered me in and all of that. But I didn't want to trade like that. And where would my take profit be? Well, sensibly, I know that price will trade below here, but price will have a little bit of issue trading below there. I would have taken some profit here. This is like about 1 to 3. All right. And if I was able to start up some trades, I would have even exited around here. All right. And then hold some position until here. Because on the hourly time frame, that's where the sell side liquidity is. We trade from liquidity to liquidity. All right. You can see this is liquidity sitting here. And if you wanted to just hold until you get there, fine. But you can take some profit here and then take the rest here. All right. It will definitely get here. All right. So that's it. Well, you can't be 100% sure, but 70% of me knows that it will get here. But it's good that since you know that it will trade from here to here, why not take a very good advantage of between here and here? When you take a very good advantage, risk properly. All right. You still have to risk properly, but if you are like 70% sure that price will move from here down to here, then you should be more sure that price will move from here to here even more quickly. You can take very good advantage of this zone. That's pretty much it. This opportunity is nice. Now that I've missed out on entering around here just the way I told you, that could have been my first entry, and then I'll be preparing for second entry. I'm still waiting for in my time, 8 a.m. is the London session. You can see the time here. So since I'm still waiting for the London session, what I'm waiting for is there are two things. Preferably, I want price to come into this zone. All right. If you look, there's huge imbalance sitting around here. There's imbalance. The bottom of this candle, the top of this candle is imbalance. But this guy has filled up a little bit of it. But there's a breaker block sitting here. Did you see that? The breaker block. Nice. And I don't want to see price trade above here. And I won't have a pending order here. Don't get me wrong. It's pretty easy. Price will always give you entry if you wait. If it doesn't give you entry, forget about it. So what I'm waiting for is, first, what I prefer first is price trading into this zone, probably trade above it, maybe get into this, touch this guy. But if price should touch this guy, I might as well expect price to sweep this high and change structure again. First, I want to see price trade into this zone and then eventually change character, all right, either on this time frame or on a lower time frame. Can be 3 minutes and 1 minute. All right. That's first. Secondly, because price needs liquidity, you can see where I put my alert, this guy. Because price needs liquidity to go. Price may not go above. All right. You can see we have FBG around here too. All right. And this guy had already killed this zone. All right. And this could have served as a single candle mitigation. And that's a lot already. So price possibly as market open will trade up until this zone. All right. Now, left to me, I now know how to refine to lower time frame to find an entry. So if price trades into, takes this liquidity and gives me entry around here, fine and good, I will then have to trade it up until this point. All right, up until this point. See, because that's where I know that if price should start dropping, price will have faced some frictions around here before eventually maybe I trade around here, take some profits, and then the next session, which will be the New York session, I will then find another trade. All right, if it's still gonna go down, to trade it down to this point. That's pretty much it. We'll update this trade after I take it.
A few moments later.
All right, folks. Like I said, now price has eventually happened. I'm making this record 20 UTC plus 1. So when I made the first record was 7 a.m. All right, this pretty much after the trading day, right, in this part of the world. You can see what eventually happened. And like I said, I was willing to take out most of the profit here. But what price did was that price just came all the way up, tested. They say that this guy has already mitigated this order block here, right? And then this guy just tested this, which is good, nice order flow. Right, for price not to trade above, order flow is still intact. How did I make this trade? Was just with the struggling happening around the drop of this. That's just your entry, right? Now, this move started at the stock market opening bell, right? In my time is 2:30, right? So there was an opposite move. I could have traded the lower time frame, but I just wanted to trade a better move, which is straight in the direction of the trend, right? So if you look, you see this breaker block. I had a pen order here for another entry, but eventually price came struggled around and take out my stop, right? This was just the first move. Now the second move was a loss. Not bad. And looking at this, the trade is actually still deciding because right now I feel like we may want to start going up, all right, because there's a bit of some kind of struggling. But I am not convinced that we're going to go up yet because for price to eventually start, price has to grab this liquidity, right? Price has to grab this liquidity. I'm going to make a follow-up video on that if eventually price comes down. So how do I want to take this trade? Maybe during a New York session. What I would love to see for me to take this trade on New York session on the next trading day would be first, I want to see price, right? Take out this low, right? Knowing fully well that this was the other block that caused this opposite move. All right. I want to see price take out this low. Once price takes out this low, there is no cause for alarm again. But I want to see price take out this low because that's the only area that's yet to be mitigated off the because you can see around here, this place can still cause an opposite movement. So I would want to see price take out this. Once price takes out this guy, the next thing would be to look for an entry. All right. It could be FVG, it could be breaker block, it could be other block. Anything at all of that could trigger me making an entry during the session. That's just it. And I would love to ride it until top of this daily, hourly FVG, this area of fair value gap. Right. That's pretty much what I will be expecting. Somebody will say, why not after take out this? It's already late, and taking out this does not guarantee anything because the structure here, the mini structure is still bullish. So until this area is run, all right, that's when I know that yes, bearish. Another thing could be even if price didn't take it out, price could show sign of weakness. All right, price might just drop to this point, all right, drop to that point, go back a bit, and then drop to this point. Once this low that tested this high is broken, even if you retrace this without taking out this low, that's an entry. All right, we stop above here, something like that. The top still trade it that way. That's another way. It's called flip method of entry. Until next time, bye for now.